Hi, I'm Max Keiser. This is the Keiser Report. Sometimes the easiest explanation is the correct explanation. Stacy?
All right. Well, I want to say that the correct explanation is that Bitcoin is the Waffle House of money. And that is, as we have hurricane season has clearly just begun. And it's the bad part of it has just begun. And Waffle House famously always stays open no matter how bad things get, except for like category 4 and 5. Bitcoin never shuts down. And you're going to need that because we have some category 5 sort of financial storms on the horizon, equity markets, property markets, all sorts of supply chains. We have some storms on the horizon, Max.
Oh, okay. Excellent. Well, the Waffle House indicator is a long-term indicator. If the Waffle House closes, that means the storm is a serious storm. Usually it just continues. A lot of times you'll see people in the Waffle House and the flood waters will be rising above the windows and it goes above, they're actually eating their waffles underwater. Usually that's what happens. If they do close, it means that they're in a category 9.
Well, let's look at some possible category 9 situations. And into this, I put also social unrest related to the aftermath, the consequences of the interventions to stop, normal market corrections or business cycles. So global central banks have bought $834 million of financial assets every 60 minutes. And every 60 minutes, the market cap of global tech stocks has risen $780 million. This is according to Bank of America. It's not coming from any conspiracy theorists. It's actually Bank of America relating Fed money printing, purchase of assets, and the increase in global tech stocks. And they have a chart here. You can see the central bank liquidity is a darker line, where the light line is market cap of Amazon, Apple, Facebook, Google, Microsoft, and Netflix, and Tesla.
Right. Like I was saying, sometimes the simplest answer is the correct answer. And a lot of people ask, why are these tech stocks so high? Why is the stock market so high? And the simple answer is that it's a transfer payment. The federal government is transferring the paper money that they print into the pockets of the tech executives. It's as plain as the nose on your face, and you can see it in these numbers. For those who get transfer payments like food stamps and other government relief programs, they understand how this works. The government prints money and they give them the food stamp and then they go buy food. Here, the Federal Reserve Bank prints the money. They give it to Tim Cook or the guys at Google or the guys over at Amazon, and they stick it in their pocket and go out and buy a yacht. But it's the exact same mechanism. It's a transfer payment.
Yeah, but it makes it into their pocket and then some. Like, I was just reading a statistic that the data on how much was actually stolen of all that PPP and enhanced unemployment benefits in the past year was up to $400 billion, right? So that never made it to the alleged recipients. The same with the rent moratorium, which the Supreme Court stepped in last week and said, you have to end the moratorium, people have to pay their rent. Well, there had been $47 billion allocated by Congress to pay that rent anyway for the past year and a half. Only $4 billion of it made it. So where does all that? It's like into a hurricane, a lot of things get picked up and thrown around and you go missing.
Right. Well, I remember on Wall Street, we used to talk about the difference between a successful stockbroker and a really successful stockbroker is the size of the order that you're asking for. And what you learn on Wall Street is that the thing that makes you successful is just asking for bigger orders, right? So why ask for 1,000 shares order when you can ask for 10,000 or 20,000 share order? So the only difference between Tim Cook at Apple and somebody living in a development project somewhere in the poor zone is that Tim Cook asks for big orders. He goes to the Fed and says, I want you to send me $20 billion to buy back my own stock and make my executive stock options go up. And I'm going to cash them out, by the way, like you did last week. And I make many, many billions of dollars. But they're both essentially petitioning the federal government. There's no difference between the person on food stamps who's asking essentially for $20 for a bag of Twinkies, a bag of chips. That's the size of the order that they're asking for. Tim Cook is asking for a $20 billion order, but it's the same mechanism. They're just soliciting the Fed for that free money And they're both contributing to catastrophic economic catastrophe that we're seeing play out.
But with this whole Bitcoin is the Waffle House of money and why we might need it is like, okay, so the stock markets have gone up parabolic and they continue to hit new all-time highs, S&P 500, the NASDAQ, the Dow Jones, everything hitting new highs. Property markets also hitting new highs across America. And so Bank of America and this report that Zero Hedge is covering also looks at, basically the wealth and income gap. In case someone was still unaware, quote, central banks have spurred greater wealth inequality. That's a quote from Bank of America. And they provide this chart. Central banks have spurred greater wealth inequality after $22 trillion of QE. Wall Street is now 6.4 times the size of Main Street. You see, since these crises began back in 2008, 2009 with the financial crisis, this is the beginning of that. And you see all the red lines are the new QE programs. And as you see, the line we're following here is the percentage of Wall Street, basically ownership of the economy. So they have as much wealth as 6.4 times Main Street.
Right, and how they get around it, rhetorically speaking, is that the Federal Reserve Bank will always say they're trying to increase the inflation. They're trying to increase the inflation. And we're going to keep printing money until we get more inflation. And meanwhile, all that money that they are printing is hoarded by the banks. And Bank of America would be to know what's going on here because they're one of the banks that hoards the money and doesn't lend it out as loans to small businesses or anything like that. As a result, you have this enormous wealth and income gap because they simply hoard the money. It's what Bank of America is saying. The money printing is creating a wealth and income gap. The language that the Fed uses, that Jay Powell and his predecessors will use to disguise the fact that this is a wholesale ripoff, is saying we're trying to create inflation. That's the lie. That is the basic Maoist lie.
The other lie is, this sort of political war, culture war going on is that, when there are people who say, make America great again, these are people who tend to be older. It's not like 20-year-olds born at that point, when it was already very unequal. There are people with memories of this, decades of more equal sort of society and where the top didn't run away with all the wealth and that the Fed wasn't intervening like this nonstop to rescue the markets, partly because we had a gold standard for so long into that early period there. But so when people are longing for a past, what they're longing for is that sort of where this wasn't happening, where there weren't lords. Nobody likes a lord. Nobody likes an aristocrat. We fought a war over that and we have them back now. But now it's like called a meritocracy. And it's corporations have the right to exclude you. We have the right to live this way, and blah blah blah. And you're a deplorable. So it's now couched in the neo-feudal language is more. It's harder to pin down, right? It's harder to have an enlightenment against it.
Right. Well, make America great again. Those 4 words are arbitrary in the hands of propagandists. The 4 words uttered could have been feed parakeets stale bread. And that would have also been interpreted as wildly inappropriate by a presidential candidate and a president in the face of this tsunami, this wall of propaganda coming from the Tim Cooks of the world, who get the transfer payments of hundreds of billions of dollars that they simply pocket, or the speculators in like Warren Buffett and Blackstone Group, who also just get a free transfer payment and just put it in their pockets, right? So. And they control the media, so it doesn't really matter what those 4 words could be. It doesn't matter what anybody says. If you control the propaganda, you control the reality of the markets.
You control the reality of the markets brings me to this last one, because like with feudalism, the old feudalism, you had these structures. You had the obvious signs of here's the castle, here's the king. You saw that what to fight against. Now they say it's free markets. This is meritocracy. How can you fight this? This is like the way it should be. Well, we no longer have free markets based on fundamentals. There is only the Fed with its ever-expanding balance sheet levitating these fake markets with a tsunami of fake money. Do you think they will taper? And he uses that chart of the S&P 500 meets the Fed's balance sheet. So they're the ones creating these aristocrats. They're the ones causing this. And they obviously, with their propaganda, what they say over and over is that we're doing it to help the poor, the unemployed, the people who don't have jobs anymore because of COVID. We're doing it because of COVID. We're doing it because of the financial crash. We're doing it because of the property market crash, the subprime meltdown. There's always something that they're doing this for, to help the poor.
Right. Well, I see what's happening in Australia. Instead of tapering, they're quarantining. They're opening camps, right? Isolation camps. They're doing these kind of imprisoned camps, and they're giving people 1 hour a day out in the yard exercise. They're turning into a penal colony from where it started. But that's a central bank move, and that's being replicated around the world. Every central bank in the world, instead of tapering, will open prison camps. That's like, well, Australia is doing it. So it's not a theory here. I mean, that's exactly what they're doing. I mean, Australia, remember, a year ago with Steve Keen on the show, their property bubble was an enormous bubble. And they kept bailing it out with more money printing again and again and again. And when's it going to pop? When's it going to pop? Well, their solution is, we're not going to raise rates. We're not going to bring sanity to the markets. There is no meritocracy. We're going to open camps. That's what they're doing.
Well, you know, the Fed says they're going to start to taper, and this is something that the Keiser Report has reported on for almost a decade. Over a decade since they started the quantitative easing, started causing, as Bank of America said, the greater wealth inequality, started doing that. We said you can't taper a Ponzi, and this is a Ponzi scheme, and we believe they'll continue it. And whether or not they open camps, we'll still be reporting there. We're in all the great camps of the world.
Right. Remember, tapering will set you free. That's a good slogan above the camp, right? We're going to take a break, and when we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to return to our conversations with David Morgan of the Morgan Report. David, welcome back.
Max, good to be back.
All right, listen, I want to pick up on a comment you made in the first segment, talking about Jay Powell's recent testimony saying things are great, no problems. But look, we know that that's a lie, because if things were great, they would not have to be buying billions of dollars with the treasuries every day, every month. They do it because things are not great. They don't do that because it's good for the economy. They do it as a measure to stop the inevitable, which is that all banks in America are technically insolvent. How does he get away with that lie, David?
Good acting lessons. I don't know, Max. It's just, as I said earlier, I'll just reiterate a little bit from the first segment. Most people are too busy trying to earn a living to understand what an interest rate does, what the purpose of it is, how it's set. They don't understand a debt market. They don't understand a corporate bond from a treasury bond. So most people are oblivious to the financial markets, yet it's a huge segment of, what makes the world go round these days. I mean, really, in a robust physical economy where we're really working hard and producing a lot of stuff and everybody's happy and you've got low inflation and, everyone's life standard of living is good and getting better, about 4% is devoted to the financial markets. Now we have some, we count all the insurance companies and the healthcare system and insurance companies. It's like 40%. It's crazy.
They once again start talking about tapering the expansion, as I've been saying now, going all the way back to Bernanke, really going all the way back to Greenspan. And again, the media buys it. They seem to think that that's a viable option. We know that you can't taper a Ponzi scheme. We know that there's never going to be tapering on the agenda. I mean, it's like going into some kind of hardcore prison and expecting to find a loving relationship. That's not what's going to happen. And that's what these central bankers are doing to America every day, forcibly. And but nobody seems to care. Nevertheless, gold, which is the go-to commodity in times of stress, over the past 10 years is down 3% or more. What happened to gold, David? What's the latest on this?
Thanks for putting me on the spot. Certainly not reacting as you would expect. I mean, I will give you that. But, I've kind of taken a bit of a deep breath and reevaluated, what do we really expect? And Nick Barishev did a nice review of the gold market. So if you take the gold market from 2000 to 2020, it has had a compounded annual growth rate of 10%. That's compounded. So we've gone from 252 to roughly 1800. So it's done its job. It has actually maintained your wealth. Yes, we've had several years where it went down, but we had several years, 11 years in a row where it went up. So on balance, from the long-term perspective, gold's actually done its job. Is it's doing its job right now with all the inflation and problems we see throughout the markets, the debt markets, the stock market, the currency markets? No, it's not. But it has a tendency to catch up or lead. It's not leading right now, obviously. Maybe gold sniffs some more deflation in the imminent future. I don't know. But that's my answer. I think it's, even I've expected probably too much out of gold. It's not there to make you wealthy. It's there to protect your wealth. It's actually done that in real terms. The real inflation rate by John Williams is about 9%. So a 9% inflation rate, gold's done 10. It's maintained your purchasing power.
Right. And in any other currency but the US dollar, it's actually done fantastically well. If you look at a country like Argentina, Brazil, these other countries that are actually experiencing hyperinflation, gold is maintaining purchasing power. I mean, the only thing you want with gold is to maintain purchasing power. That's what you get with gold. And you get it for thousands of years. You maintain purchasing power. With fiat money, you're guaranteed to lose purchasing power. That's an historical accurate truth. For 300 years, no fiat money has gone against the basic fact that you lose purchasing power. Between 98 and 100%. Over 300 years. None of them have escaped this. Now, with Bitcoin, of course, you're guaranteed to increase purchasing power. It's a mathematical certainty. And that's why people, especially the Gen Z and the millennials, are flocking to Bitcoin. And given the uncertainties in the fiat world and the rampant runaway inflation, one can understand why over the past 10 years, Bitcoin has been compounding at 200% a year, because it's reflecting already the hyperinflationary collapse of the dollar, in addition to being unconfiscatable, portable, more divisible, and censorship resistant on top of its ability to guarantee increase of purchasing power. Why are you not buying more Bitcoin, David Morgan?
Well, I am. We did buy Ether at a good time, and we have a couple more ways to invest in it. So I finally, I guess, drank the Kool-Aid, as others might say. I'm not a purist. I think you should have a diversified portfolio. Certainly, to deny the blockchain technology is putting your head in the sand, definitely. I would like to say something about the silver market, though, Matt, because my propensity to think through the silver market. So as you know, there's a possibility of having, at the end, 21 million Bitcoin. And I didn't check the price today. Where are we, near 50,000 or so? Yeah,
we'll use that as a number. Sure, go ahead.
Okay, but in the silver world, the silver market is commercial bars, the 1,000-ounce bars, and there's only 2 million of those. So there's 1/10 less silver, if you denote, as I said, commercial bars. There's 1/10 as many as there are Bitcoins, and it's half the price, 25,000 per unit. So if you think about how rare Bitcoin is, I'm saying the physical silver market's even rarer.
Right. Well, with Bitcoin, you have absolute scarcity, whereas with the silver market, you have relative scarcity, right? There's always going to be more silver. And as the price goes up, technology improves, which gives you even more silver. So it's not absolutely scarce. Similarly, with Ether, there is never been an audit. Nobody knows how many Ether there are. It's highly centralized versus decentralized, and transactions are routinely reversed. So it's what we call a garbage coin. And the unit bias is such where people, for some reason, like to flock to that. But I equate it to a very bad kind of Toronto-based mining stock, penny stock, that people flock to, even though it's just a guy looking over a hole in the middle of the desert. They still give him millions of dollars. So that's Ether. But I appreciate the fact that you're slowly moving toward the actual Bitcoin that would set you free from the constraints of being trapped in a certain mindset. But let's keep on because you're a guy who knows stuff. Let's talk about commodities and let's talk about supply chains. They've been breaking down, and the problem seems to be getting worse, especially with the supply of container ships. To get supply to the shelves, right? You mentioned in our earlier talk, these people don't know the difference between inflation driven by money printing and inflation driven by supply chain disruptions. Let's talk about those supply chain disruptions. From my point of view, from what I see, it looks like a chronic problem that's getting worse. What do you see?
I see the same thing, and we just specifically look at food for a while. There's been locusts, there's been weather, there's been paid to not grow, there's been a multiple amount of factors that have curtailed the food supply across the board. And then on top of it, you put the shipping problems in with the containers that are not as available as they could be, and people willing to pay astronomical rates to get their goods to the front of the line. We've got a real problem, and I think it's going to compound. I love to go back to John Tainer's collapse of complex societies. And the more complex a system is, the more points of failure there are. And we're in multiple points of failure in almost all of the structures in this modern society. And we are interdependent. It is a global economy. And we have to be cognizant of that. Just because we want something that we think we should be able to get at the drugstore, most people don't realize about 60-70% of that came from China in one way, shape, or form. Yeah, it might have a U.S. label on it, but was produced overseas somewhere.
Right. You and I are both sitting in front of the camera with bookshelves in the background. The difference being is that I believe you have probably read all the books in your background, whereas I have not read a single one of these. I think people need to take a note of that. That's why your answers are as good as they are. That's why you're on the show, David Morgan. You actually read books, which I like. Now, so supply chain is breaking down and China's got the upper hand. You mentioned Taiwan in the earlier episode that we did. Let's do a little wargaming here. Taiwan's got 80% of the world chip market. Chips are kind of the new oil. They're the thing that keeps the modern economy going. America looks like it's collapsing. The travesty in Kabul is a big signal to the world. As you point out, it's the saying that, we can walk away from the petrodollar. Are you hinting at that Taiwan could be in play? Is that what you're hinting?
I am hinting, and if I knew more, I'd say more, Max. I prefer being right than wrong, but I'm not afraid to stick my neck out, as you well know. I think it could be. The other thing about the semiconductor market, I've gotten some mixed signals here lately, and I haven't been able to follow through to be certain. So I don't like to take one data point and say, well, I need to have more information. But a fact is that semiconductor world, I didn't know until recently, takes 44 million ounces of silver per year.
Right. Okay. So, and also in the solar industry is incredibly silver intensive. Okay, let's get back to the silver, David. Why is silver so sluggish? Because it's got industrial use. It is relatively scarce. People need an inflation hedge, and it's sitting there like a dead duck. What the heck is wrong with it?
Lack of knowledge. I mean, so few people think of it as an asset class they want to be involved in. I mean, if Wall Street, when Bitcoin really took off, I was writing the Morgan Report, of course, and I made the not so adept statement that Wall Street has caught on to Bitcoin. Watch out. When Wall Street gets behind something, it's really going to go. It went from 11,000 to 55 or so. I think it touched near 60. I wasn't surprised at all. When you get if Wall Street ever got behind silver, no telling where it would go. But it's basically something you have to ferret out on your own. There's all these sexy cryptos out there, some merit, some without, but it's a new place. And of course, the social media has such a wide base, especially among millennials and Gen Z. And it's kind of fashionable. People like to work in herds, even though they think they're independent. Most aren't. They're followers, not leaders. And if everybody's buying XYZ crypto, that's the place to be. Forget about silver. And then you look at it. You say, come on, this thing hasn't done really anything. It has compounded at 9% per year, taking the same analysis I said a minute ago on gold. Gold's done a better job of preserving your worth than silver. I think silver will take off still, and it's not because I'm addicted to being right. I've been more, on balance, probably 50-50. I don't know. Someone could make up my track record. The point is, 10 years from now, the industrial demand for silver is projected to be 80% of the market. And right now it's 50% of the market. Last year, Max, we had record silver purchases by institutions. On a good year, the silver market sells 120 to 200 million ounces of silver. The retail market in 2020 was 200 million ounces of silver, and the institutional side was 320 million ounces of silver. 520 million ounces of silver. Absolute record beyond belief last year in 2020, and the market did go up. I think Scott Meaner did what he said when he was at Davos, better known as the World Economic Forum in January, and said his go-to investment was silver. I think through all 2020, he was buying. That's my conjecture. I can't prove it. We have been on track about the same rate so far halfway through this year. So something's got to give. The paper paradigm can only work for so long.
I'm excited. Those are some compelling numbers, David Morgan. I like it. Well, I think you might be onto something. Thanks for being on Keiser Report.
My pleasure, Max. Thank you.
All right, and that's going to do it for this edition of Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank our guest, David Morgan of the Morgan Report. Until next time, bye, y'all.